Something big just dropped in the American car market, and it's coming straight from Mercedes-Benz. The German luxury giant has sent the entire U.S. auto industry on high alert after confirming that new federal tariff proposals could cost them nearly $1.7 billion in profits if Washington enforces higher import duties on European-made parts. That's a massive shockwave, because even Mercedes vehicles assembled in the U.S., like those built in Alabama, depend heavily on imported transmissions and components. But here's the twist. Mercedes isn't backing down. Instead, they've announced a bold plan to ramp up local EV production, expand their Tuscaloosa battery facility, and lock in exclusive year-end deals across their 2024 and early 2025 lineups. Right now, U.S. dealers are rolling out offers like up to $7,500 lease credits on EQ models, 0.99% APR financing on select C-Class and GLE SUVs, and special loyalty programs for existing owners looking to trade up to electrified models. That's Mercedes fighting fire with fire, turning tariff tension into a sales surge. So why is this shaking the market? Because Mercedes isn't just reacting, they're recalibrating the entire premium segment. The company knows that American buyers are shifting toward EVs, but they also know luxury still sells. That's why they're doubling down on what they call electric luxury without compromise. Their new EQE SUV and EQS sedan are proof of that, offering more range, higher-end interiors, and ultra-fast charging upgrades that now outpace many rivals from Tesla, Rivian, and BMW. But here's where the alert gets serious. Industry insiders say if tariffs go into effect in early 2026, Mercedes may be forced to adjust U.S. pricing, with some analysts predicting a 3 to 5% increase on top-tier models like the S-Class and GLS. That could send shockwaves across the premium market, pushing competitors like Audi, Lexus, and BMW to respond instantly with pricing plays of their own. The new American game plan. Mercedes' response isn't just about protecting profits, it's about future-proofing its American footprint. The automaker is quietly repositioning Alabama as a core EV production hub, with plans to localize more battery assembly and reduce reliance on European imports. The idea is clear. If tariffs hit, Mercedes will be ready to build more, source more, and sell more, all on U.S. soil. And they're already testing the waters with the upcoming EQC SUV, expected to hit American showrooms in 2025 with a competitive starting price around $58,000 and a real-world range north of 300 miles. Combine that with the Mercedes Me Charge network partnership with ChargePoint and Electrify America, and it's clear the brand is digging deep to win the EV game at home, not just abroad. Market reactions and early ripples. Meanwhile, Wall Street and industry analysts are watching closely. After the tariff announcement and Mercedes' U.S. response plan leaked, shares of key suppliers like Magna and Continental dipped slightly. But U.S. dealership networks saw a surge in consumer interest, particularly in the EQE SUV, which saw a 12% bump in inquiries week over week. Auto forums are buzzing with buyers debating whether now is the time to secure a Mercedes before potential price hikes in 2026. And Mercedes is taking full advantage. Dealership sales reps have been told to highlight the current offers as last-chance deals before the EV pricing structure changes. It's a smart play, urgency sells, and Mercedes knows how to build it. What's next? And that's where the alert gets louder. Because behind the scenes, Mercedes-Benz USA is preparing something even bigger. A rumored new hybrid lineup that bridges the gap between the EQ and traditional ICE models, including a refreshed GLC 450e and the return of the iconic E-Class all-terrain in plug-in form. If true, it would be the company's strongest U.S. lineup shift in over a decade. One designed to dominate both sides of the market: luxury and sustainability. The ripple effect. Tesla, GM, and Ford on watch. The second Mercedes made this announcement, the entire U.S. auto industry felt the tremor. Tesla's executives reportedly called an internal meeting the same week the news broke, worried about what Mercedes' new EV pricing and tariff strategy might mean for luxury EV margins. Remember, Tesla's been slashing prices all year to keep demand alive. But Mercedes isn't following that playbook. Instead of cutting prices, they're amplifying value. The EQE SUV now offers enhanced software updates, new hyperscreen features, and upgraded interior tech, without lowering the sticker price. That's a direct shot at Tesla's dominance in the luxury EV sector. And GM, they're caught in the middle. Cadillac's Lyriq is struggling to meet sales expectations, and the Escalade IQ's production timeline keeps shifting, with Mercedes pushing locally built electric SUVs and securing supply lines. GM's EV strategy suddenly looks a step behind. Ford feels the pressure. Ford, meanwhile, is bracing for a showdown of its own. The Blue Oval's premium EV push with the Lincoln brand hasn't matched Mercedes' pace in design or delivery. Insiders say Ford executives are quietly worried that Mercedes' Alabama expansion could steal both talent and market share from their own Tennessee EV operations. The timing couldn't be worse. Ford just announced delays in F-150 Lightning production and a pause in future battery plant investments. Meanwhile, Mercedes is quietly ramping up its next-generation battery line, reportedly designed to cut charging times by 50% and extend life cycles beyond 600,000 miles. That's not just competition. That's a warning shot across Detroit. The American luxury war begins. And make no mistake, this is becoming a full-blown luxury war. The American consumer is now being bombarded with two options: flashy, tech-first EVs from Tesla and practical, style-loaded EVs from Mercedes. But Mercedes is betting that when buyers walk into showrooms, it's not horsepower or acceleration that seals the deal. It's craftsmanship, comfort, and credibility. The brand's message is clear. We don't follow tech trends, we define them. Their latest marketing push, featuring the tagline, "Electric Made Iconic," is already dominating digital ad space across the US. Mercedes knows Tesla has software, but they have soul, and that's their competitive weapon. Dealer impact, the silent shift happening now. While corporate giants make headlines, the real battle is happening in dealerships. Across states like Texas, California, and Florida, Mercedes-Benz dealers are reporting record pre-orders for 2025 EQ models. Why? Because customers are realizing the prices they see now might never return once new trade tariffs kick in. Some dealers are even calling it the pre-tariff rush. Customers are walking in expecting delays and instead being told about fast-track delivery options, special leasing credits, and free home charger installations with select EQS and EQE trims. The urgency is real, and Mercedes knows how to turn that into momentum. Wall Street and market sentiment. On the financial side, investors are starting to take notice. Analysts from Morgan Stanley and Bloomberg Intelligence say Mercedes' U.S. localization strategy could actually insulate it better than rivals if trade wars heat up. While Tesla and GM rely heavily on China for battery materials, Mercedes' move to source more parts from within North America could turn into a massive advantage by late 2026. The stock's American Depositary Receipts, ADRs, even saw a slight uptick after the announcement, a sign that investors see long-term stability where others see risk. But this stability comes with a challenge: higher upfront investment, more labor costs, and tighter timelines to deliver the next generation of EVs. The technology edge Mercedes is hiding behind closed doors. Mercedes engineers are already working on something the public hasn't seen yet: a US-exclusive version of their MB-OS, Mercedes-Benz operating system, built to integrate more seamlessly with Apple and Android ecosystems, and even allow over-the-air updates without a subscription. It's a direct counter to Tesla's paywall-style updates and GM's controversial decision to remove Apple CarPlay from upcoming EVs. When this system launches, possibly alongside the new EQC SUV, it could change how Americans view automotive software altogether. The bigger picture. Here's where it all connects. Mercedes isn't just trying to survive the EV revolution in America. They're trying to redefine luxury for an entirely new era. The combination of local manufacturing, next-gen battery technology, and customer-first innovation isn't random. It's strategic. Every move they make now points to one mission: dominate the US luxury EV market before 2030. And if they succeed, they won't just be challenging Tesla and BMW. They'll be rewriting what Made for America means in the luxury segment. The price shockwave. That's coming. The truth is, what Mercedes just set in motion could completely reshape how cars are priced in the US by 2026. Industry experts are already warning that if Mercedes moves ahead with its US localization and tariff defense strategy, it could force rivals to raise or rethink their pricing structures. Picture this. Mercedes keeps production local, stabilizes its supply chain, and keeps prices steady, while BMW, Audi, and even Lexus face higher costs for imported parts. That could mean Mercedes suddenly becomes the most price-stable luxury brand in the country, a title no one would have predicted just a year ago. And once that perception shifts, resale values shift with it. Because in America, perception drives value, and Mercedes is about to look like the only luxury automaker thinking 2 steps ahead. How prices could shift. By 2026, let's break it down. Right now, a Mercedes EQE SUV starts around $77,900. The GLE hovers near $63,000, and the S-Class sits comfortably above $117,000. If tariffs hit and rival brands hike up prices by 5 to 10%, we could see BMW's X5 and Audi's Q8 EV crossing the $80,000 threshold, while Mercedes stays competitive with aggressive finance options and domestic incentives. This could create something the market hasn't seen in years. Luxury buyers switching brands for pricing stability, not just design or performance. That's unheard of in the premium market. But Mercedes is engineering that outcome. Resale value, the hidden weapon. And then there's the used car market, where Mercedes might quietly dominate next. Resale value is the silent strength of every luxury brand, and Mercedes is positioning itself to reclaim the top spot. With US-built vehicles avoiding extra import costs, and with more local parts availability, maintenance costs could dip slightly compared to imported competitors. That makes used Mercedes models more attractive, which pushes demand up and depreciation down. Analysts predict that if this production strategy sticks, Mercedes' resale value across the EQ line could rise by as much as 8 to 10% over the next 3 years. That's a big deal, because resale value directly impacts leasing costs, meaning Mercedes could soon offer the most affordable luxury EV leases in the entire country without cutting retail prices. Luxury competitors are rattled. Meanwhile, rival luxury automakers aren't sitting comfortably. BMW has already announced emergency meetings about re-evaluating its Spartanburg plant production lines, while Audi's US network is pressuring the company to localize EV builds faster. Lexus is rumored to be revisiting its 2026-2027 EV rollout timeline, especially after Mercedes' Alabama expansion announcement caught them off guard. What's interesting here is how Mercedes has changed the conversation. Instead of chasing sales volume, they've shifted the battlefield to production control. The message is simple. If the US government changes the rules, Mercedes will be the first ready to play by them. The dealer pulse. What's happening on the ground? Talk to any Mercedes dealer right now, and they'll tell you the same thing. Customer sentiment is changing fast. Shoppers, who were once hesitant about EVs, are now calling dealerships to ask about the last pre-tariff models, or locally built EQ options. Showrooms in California, New York, and Texas are reporting record inquiries for the EQE and EQS, not because of price cuts, but because customers sense something big is shifting. Dealers are using that energy masterfully, with exclusive weekend events, test drive programs, and incentives like complimentary 2-year maintenance and home charger installations for early adopters. Mercedes has turned what could have been a market scare into an emotional trigger, urgency blended with opportunity. The EV race just changed. And here's the wild part. This move could change the EV race entirely. For years, the story was Tesla versus everyone else. But now, with Mercedes doubling down on American-built EVs, Tesla's narrative of "made in the US" doesn't sound as exclusive anymore. In fact, if Mercedes delivers on its promise to open new EV assembly lines and battery production in Alabama, by late 2025, they'll become the only European automaker manufacturing EVs at scale in the United States. That alone could trigger a chain reaction, not just in pricing, but in government incentives, dealership competition, and even consumer loyalty. Beyond the numbers, the emotional shift. Because let's face it, the Mercedes badge still means something in America. Its status, its trust, its legacy. And when you combine that legacy with the new age EV tech and local production pride, it creates something Tesla can't replicate: emotional luxury. Mercedes isn't selling speed or range alone. They're selling reassurance in a volatile market. They're telling American buyers, we've got your back, through tariffs, tech shifts, and everything in between. That's the kind of message that moves markets. The political chain reaction. Mercedes-Benz's latest move isn't just rattling boardrooms, it's echoing all the way to Washington, D.C. Because when a global automaker starts expanding American production and hiring local talent, politicians take notice fast. Sources close to the Alabama state government have confirmed that Mercedes' next phase investment in EV production could generate over 2,000 new jobs by late 2026. And that's the kind of headline every candidate wants to claim credit for. The Biden administration, already pushing its Made in America manufacturing initiative, is reportedly eyeing Mercedes' local expansion as a model example of how foreign automakers can strengthen the U.S. economy while still going electric. But it's also triggering a heated debate. Should European carmakers like Mercedes qualify for full federal EV tax credits? Or should those incentives be reserved for American brands only? That question might become a political flashpoint heading into the 2026 elections. How Mercedes just put pressure on lawmakers. Think about it. Mercedes is investing billions to build electric SUVs on U.S. soil, creating thousands of jobs and using American-made battery modules. Yet, under current EV tax laws, many of their vehicles still don't qualify for the full $7,500 federal EV credit because of strict sourcing rules. This puts lawmakers in a tough spot. On one hand, they want to reward local manufacturing. On the other, they're wary of giving too much ground to European companies. But if Mercedes continues scaling its U.S. operations, Washington will face mounting pressure to revisit those regulations. And when that happens, every automaker, from Tesla to Ford to Hyundai, will have skin in the game. Because any rule change that benefits Mercedes could instantly reshape the entire EV incentive landscape. The jobs and economy angle. And it's not just about EV credits. The ripple effect on jobs and local economies could be massive. Mercedes' Alabama plant already employs thousands, but the new EV and battery expansion is expected to pull in an entire ecosystem of suppliers, from advanced electronics to lithium recycling. Nearby states like Georgia and Tennessee could see indirect job growth from the supply chain build-out. Economists estimate that for every 1,000 direct Mercedes hires, another 3,000 to 4,000 jobs could spring up in logistics, materials, and service sectors. That means the Mercedes effect could quietly become one of the biggest manufacturing booms in the South since Hyundai and Kia's expansions 2 decades ago. And that puts other automakers under the microscope, because suddenly, Mercedes looks more American-made than some of its American rivals. Election year spotlight, the EV tug-of-war. You can bet this story won't stay confined to the business section. By the time the 2026 election cycle heats up, both parties will be using EV manufacturing as a political weapon. Democrats will point to projects like Mercedes' Alabama EV expansion as proof that clean energy creates jobs. Republicans will emphasize that tariff threats and trade pressure forced global automakers to invest locally. In other words, Mercedes-Benz just became an unexpected political talking point, a symbol of both globalization and American resilience. And if you think politicians won't jump at the chance to stand in front of a shiny new EQE SUV on the factory floor for a campaign photo, think again. The corporate response, quiet but calculated. Behind closed doors, Mercedes U.S. executives are playing it cool. They're not making political statements. They're making strategic ones. The company's official line is simple. Mercedes-Benz is committed to American manufacturing and sustainable mobility. But inside the industry, everyone knows what's really happening. Mercedes is leveraging the political landscape to strengthen its brand dominance. They know that being seen as an American job creator gives them an image advantage no ad campaign could buy. It's the kind of long-game strategy that shifts brand loyalty from the showroom to the ballot box. The market's new power dynamic. And while all this unfolds, the American car market is watching something unprecedented. a German automaker controlling part of the US political conversation through smart, localized business moves. It's no longer just about who sells the most EVs, it's about who controls the narrative. Ford, GM, and Tesla once owned that space, but Mercedes just walked in with quiet confidence and real investments. And the timing couldn't be better. With consumers demanding stability, jobs, and long-term value, Mercedes' strategy doesn't just make economic sense. It makes emotional sense. It tells Americans that luxury and patriotism can coexist, that you can drive German engineering made by American hands. The next shock on the horizon. But make no mistake, this story isn't over, because insiders are now hinting at something even bigger. Mercedes is reportedly preparing to unveil a brand new EV platform developed specifically for the US market, codenamed MBX. It's said to blend the comfort of the S-Class with the utility of an SUV, and early leaks suggest it could debut as soon as mid-2026. If that happens, Mercedes won't just be competing in America, they'll be building for America. And that's the kind of move that could leave every other luxury automaker scrambling to catch up. So here's the bottom line. Mercedes-Benz didn't just make an announcement. They pulled the pin on a grenade and rolled it right into the center of the US auto industry. What looked like a quiet production update turned out to be a strategic masterstroke. One that's forcing Tesla, Ford, GM, BMW, and Audi to rethink everything from pricing to production. By shifting EV manufacturing to American soil, locking in massive new job investments, and doubling down on high-end technology, Mercedes isn't just adapting to the new market, they're controlling it. The car market is officially on alert, and every automaker knows the game has changed. For buyers, this could mean more incentives, better build quality, and a wave of luxury EVs designed right here in the US. But make no mistake, this is only the beginning. Mercedes-Benz just proved that in the race toward the future, legacy doesn't slow you down. It gives you leverage. So keep your eyes on the road, because the next Mercedes announcement might not just shake the market, it could rewrite it entirely.